Hello and welcome to Rebank. I'm your host, Will Beeson. Chris Yin is the co-founder and CEO of Plume, a crypto-native RWA blockchain. Real-world assets, RWAs for short, are financial assets implemented in token form. Alongside stablecoins, these assets are at the heart of the transition of financial markets onto upgraded settlement rails in the form of blockchains. Chris brings an interesting perspective to the RWA conversation. Whereas some firms, including BlackRock and Franklin Templeton, are focused on building institutional-grade offerings that mirror traditional financial products, Plume takes a different approach. Pointing to the success of crypto-native markets, Plume's ecosystem bridges speculative retail users and experiences with yield from traditional financial assets, on the premise that crypto energy is the source of the demand that will pull finance on-chain. In this conversation, Chris and I discuss the state of the RWA market, what's real and what's hype, the importance of crypto-native users, why there are multiple successful approaches to bridging finance on-chain, and what it takes to build and scale a thriving RWA ecosystem. Thank you very much for joining us today. Please welcome Chris Yin. Chris Yin, welcome to Rebank.
Thanks for having me. Appreciate it.
Great to connect with you. Huge fan of everything you guys are doing at Plume. We've known each other for a while, been following your work for a long time. I would love to hear from you exactly how you think about, I guess, ultimately the space Plume's playing in and your long-term vision for what you're building.
Totally. Yeah. No, again, thanks for having us and looking forward to getting into all this today. Maybe really quickly, the primer and the context, I think, is simple. We play in the sort of like RWA real world assets segment, right? So what we do at Plume is we build a chain, an ecosystem, and a network ultimately focused on allowing us to sort of bring the real world on-chain. So you can interact with the real world in multiple ways on-chain. And the reason we say it that way is because we're focused on driving us from sort of a crypto native and a crypto first perspective, which is making sure that we take these off-chain assets. As we put them on chain, we allow the nature of those assets to change and allow us to interact with them in a more crypto native fashion. So leaning into the sort of pros and the benefits of doing things in crypto, but instead of just doing this purely with the crypto native assets, doing this with real world assets as well. So that's kind of like the context where we are. We've got a big ecosystem today of 200 plus projects. We have the most number of users in RWAs. And so a lot of this is meant to really like transition, usher in this next phase. Now, the thing that's really exciting about this market in this area and why we wake up and do Plume every day is grow crypto. That was a starting point and the genesis of all of the stuff that we do with Plume, which is, we really felt that living on chain and doing things on chain was just superior in so many ways. You had a 24/7 global market. It was liquid. It was composable. You have real ownership. And more importantly, because it's liquid and composable, anyone can pick up anything at any time again to build new things. And so the innovation things that were created on the backs of this were just unbound in a way we hadn't seen before. That gave us DeFi, gave us stablecoins, gave us all these different things. That's a principle that we think is really, really important to allow any developer in the world at any point to pick this thing up and create from it. That's the start and the genesis of kind of how we've come into this. And so what I think is really interesting and exciting is like, if you just zoom out a million miles, crypto today is like a $3-4 trillion asset class. And the real world around it is multiple thousands of trillions, every subset of RWAs. Whether you look at derivatives, you look at equities, you look at debt, you look at private credit, or all of these different things, even collectibles, are all multiple trillions of dollars. And ultimately, the accumulation is thousands of trillions. And so that's what I think is happening right now, is we're trying to find the right way to bring those thousands of trillions of dollars on-chain, and to allow us to grow the on-chain economy and to build this singular unified world. So you don't have the NASDAQ in one place, but the Hong Kong Stock Exchange in another, and from this fragmented liquidity, fragmented experience, and inability to access different things. You don't have also these localized markets that happen on eBay or whatnot, or whatever it might be. When you're trading small things, you should be able to connect everyone at any point. And so the magic of crypto is I can log on any point, anywhere, click a few buttons, and whatever I need to happen happens. And we want to basically apply that same experience and boil everything down to that into anything else in the world. And so that's what I think is really exciting about this. And we've seen the confluence of many things. Now, one is the BTC ETF, which kind of led and catalyzed a lot of the big institutions to begin taking crypto very seriously. We've seen the stablecoin really come into effect in a major way, where now every country in the world is thinking about issuing stablecoins, every bank, every financial institution issuing stablecoins, and thinking about how that impacts their business going forward. And then as the result of all that activity, the regulation is really lighting up. People around the world, whether it's in the US, whether it's in Asia, whether it's in Latin America, in the Middle East, are all thinking about changing the rules and changing laws to allow these things to really flood in. And so I just think we're at the precipice of a lot of change. And I think the change is always exciting because it allows new things to come in play and new types of products and new experiences and ultimately things that benefit everybody. That's what I think is really exciting about this thing. But also, I would say on the other end, it's tricky because you have all these things happening. It's a lot of noise. It's confusing, and it's very hard to parse together what's real, what's not. When I think people see big logos and big names doing things, they get very excited, and they sort of forget sometimes the fundamental truth, which is we've never relied on big companies to drive anything. Innovation is always bottoms up, driven by the users, by the people, and driven by adoption versus like a big company saying we're going to do X, Y, Z. And so when you look at that, I think it's easy to allow this category of RWAs, which means a trillion things, to allow it to take whatever shape and form people think it might be without having a more targeted approach to allow this thing to actually grow. So anyway, I'll stop there. That's kind of the thing. I think it's incredibly exciting. Like it couldn't be a bigger opportunity in front of our eyes. It's going to be a 10, 20-year journey to make this whole thing happen. But it's hard to articulate in words how insane it's going to be when it starts to come on chain.
So one of the things that intrigues me about your perspective on this, I mean, if we use kind of as a counterexample figure, blockchain focused on real deep Wall Street or institutional use cases. I think it started with an off-chain financial product, a HELOC, like a home equity line of credit, basically wanted to collapse the origination and life cycle of that product through blockchain transparency and probably automation and make it more standardized, more easily tradable, and therefore easier to allocate capital to than the off-chain. Effectively kind of create a better TradFi product in a sense. It seems to me like your view is almost the opposite, which is there are tons of people in crypto. They're in crypto for a reason. People have a whole range maybe of risk tolerances or kind of return profiles that they're looking for. Rather than try to repurpose blockchain infrastructure to solve TradFi problems, why don't we lean into what makes crypto exciting? And ultimately, there'll be natural ways to bridge that back to the real economy. Talk about that.
Yeah, I think that's exactly right. I think it's an important point and distinction in how we see the world versus everyone else. Again, taking a look at Figure as an example, which I think is a great company, and they're doing a lot of growth. And I think one of the benefits of the RWA world is that it's so positive sum. There is no world in which you have a massive growth in the market and there's only one winner. There's going to be many winners and many different approaches. And so we respect everybody and we appreciate, I think all of it is net positive for all of us. And so I'm very excited by everything that's going on. To be more point about it, I do think that our approach is historically and provably in the numbers a different and more correct path into what we think the future is going to be. Meaning, like you said, if you look at the figures of the world and other companies like that, they are solving TradFi problems with the blockchain. Let's make home equity lines of credit, right? HELOCs. Let's make this business more efficient. And think about it from a process perspective. Think about it from a bottom line perspective. How do we make this more usable? How do we make it easier to manage? How do we reduce our operational costs? So there's less middlemen involved, there's more provable stuff, blah, blah, blah. And like that view is great. And I think it makes sense. Our view, though, is the inverse, which is we're really betting on the growth in the crypto economy rather than a transformation in TradFi products. I think the transformation is a consequence of our perspective versus the anchoring of it. The anchoring for us is we think the crypto world today of $3 to $4 trillion in assets of X number of users, however many they might be, is only growing. And as that grows, the types of things these people want to do are going to change and evolve and bet on, right? So I would say rather than taking an existing thing and trying to transform the guts, we are betting on the building and exploration of a new world. To me, we are conquering a new land. It's going to America back in the 1700s. Well, it's a new land. We're building something brand new versus going into an existing America today and like repurposing the sort of pipes. And so that's how we think about it. It leads to that philosophical, it leads to a difference in our approach and the process, and the products are ultimately created as a result. I think we lean very heavily on crypto principles, which is liquid composable usability and a focus on the top line versus the bottom line. Nobody gets into crypto to save money. People get into crypto to make money. That's why BTC is a thing. That's why meme coins are a thing. That's why all these products are a thing. People are here to make money, to find ways to generate more alpha, to generate more income, more revenue. That's how we see it. That's what it maps to my historical sort of view on things and my experience. And so if you take that view, instead of taking a TradFi product and TradFi experience, which is KYC and gated and hard to use and transfer restrictions and all these kinds of things, and the end user benefit of just fixing the process stuff is not dramatically different. Maybe it gets cheaper, right, for the end user. And eventually some of the benefits will get here. Versus our approach is how do you transform that product into a crypto native experience? How do you make it feel like crypto? Buying and trading ETH and Bitcoin or holding ETH and Bitcoin or any alt is a dramatically different experience than trying to buy a home, as a simple example. Or even buying treasuries. Buying T-bills in the real world, right, which something I was not super familiar with before this, is a whole thing. It's a pain in the ass. You got to go there. You have to buy things in certain increments. The auctions only happen on certain days. You have maturity dates where you can't hold. Like, it's a very different experience. The UX is just not very good. Versus if you were to buy an on-chain version of T-bill today through what it has become. So take maybe USDS, Maker's product, Sky, or Sky's new product, USDS, which is backed by T-bills, and so you get T-bill yields just from holding that. Today, I go to Uniswap or go wherever I want, or go to the Maker site. I take my stablecoins, I click deposit, and I swap anything, and now I'm holding T-bills. It's a dramatically different experience. And so that's how we see things. That change is huge because what you've seen today is by doing that, USDS has what, $4 or $5 billion in TVL, a tremendous amount of usage. It's composable everywhere. It's become a standard for how people hold things, in addition to many of the other yield-bearing stablecoins. And that difference has seen just tremendous amount of usage and volume and demand and like new things getting built around on top of it. Versus you look at like a HELOC or a T-bill that is being put on chain in the same fashion, where you're QP'd up. You need to have 5 million liquid to even interact with this thing. You have only certain windows you can buy and sell. You have to do it in $100,000 increments. You have to KYC, KYB. So you look at the products that resemble that. Maybe take BUIDL as an example, Securitize's product and BlackRock's product that has a decent amount of volume, right? They have what, $2-3 billion in TVL. It's good. It's not the same. It's smaller than USDS. And more importantly, the number of holders is very small. They have 81 holders today. And the usage and composability across crypto is negligible. There's nothing there. So I just think there's a dramatically different usage. And so when you lean on crypto native versus a TradFi version, but on the blockchain, there's different experiences from it. It ends up being a different product. And I think what you can see here is our inclination is towards the top line. I don't care about saving money right now. Saving money is useful. It's great. What we care about is having these asset managers, having people that want to explore crypto, make more money, and sell into new markets and sell into new places, and allow you to expand the reach, right? People with stablecoin and with US treasuries talk about American dominance and allowing that to go everywhere. That's what we want to enable versus saying, oh, now you can transact on that faster. So the people that are already collecting T-bills can now do it in an easier way, right? This is how do you create new things and allow that experience to trickle backwards.
What are those new experiences? What's getting traction on Plume today?
It's a bunch of stuff, and so it's hard to put it into one, but I'll give you a couple of different examples, right? We have everything on Plume from sort of alternative assets, things like private equity, real estate, those types of things. We have collectibles, things like Pokemon cards, and whiskey, watches, wine, that kind of stuff, but also financial instruments from the biggest institutions in the world, from BlackRock and Blackstone and Carlyle or whatever. So you can get a broad variety of things. Now, what's actually getting traction? I think two things. The T-bill, of course, has really become a thing in crypto, and not in all over the world. As currencies have gone up and down, and like the stability here, and like interest rates are still high, T-bills are going. So, of course, there's like adoption T-bill. But I think the best example I can use is something we call is Mineral Vault. So, Mineral Vault's one of our protocols, and Mineral Vault, what they do is they do something called mineral rights. And so, what this is a company that owns a collection of 3,000 different oil wells in America. And these oil wells today, in Texas, they call it mailbox money. It's very, very simple, right? You own one, it just prints money. You get it on a regular basis. So the APY for this is pretty high. You go between a 13, 15, 18, 20% APY, depending on the collection of wells that you own. And these are all producing wells, and so your risk is low. And so what you do here is you own these wells, you lease it out to Exxon or whatever. They mine this thing, and you get a bunch of cash, and you get a bit of vig on top based on what they pull out of it, right? It's like a very stable, and like there's one thing this well does. It does nothing. It sits there and turns oil into dollars. That's it. And so like that's the kind of thing you want. It turns out it's a great asset. People will want it. Now, it's hard to articulate. It's hard to find a market if you don't know what to do. So like today, Mineral Vault today, that company has about 600,000 shareholders, meaning there are about 600,000 people who collectively own these wells and are earning money from this thing. But they want to continue to expand. They want to buy more wells. They want to do more things. They want to create more advancements and modify their refiner or whatever. There's a bunch of things they want to do here. So what do? By putting this on chain, and they were one of the first to really work with us to figure this out. How do we make this into a crypto native product? How do we make it liquid composable and have the yield payout on a very regular basis so it feels like crypto? By doing that, we put this on chain. It's been a little bit under 2 months now since we took this thing out. And from there, they've seen just tremendous growth and adoption. Today, they have about 85,000 holders on chain today on Plume holding that asset, and they're paying out real yield all the time to these people, right, in accordance with what's going on. And so from an end user in crypto now, if I want to get access today in the real world to get access to oil well, I just don't know where I would go. It's very hard to see and very hard to find out where to do. And probably if I find access to it, I have to rope together a bunch of my friends to try and like make this work, convince them and meet the minimums, hold this money. Versus on chain today on Plume through a protocol that we have called Nest, one of ours that we build an RWA yield product. I can now click a button and very simple, take my stable coins, swap into this token, and now I'm holding Mineral, right? And this is now on a very regular basis, I'm getting paid out the yields and the rewards from owning this thing. And you've seen just incredible adoption of this. Now people all over the world have access. You have 80,000 holders all over the world where they only have 600,000 in total. And this business has been around for 50 years. And so just in literally under 2 months, over 10% of their holder base is now on chain. And now it's a significant enough number. That's why we think this is important, because it's now a significant enough number and a significant enough dollar amount that they need to think about this and take this and now think about how do we further position our product and our business to appeal to this broader base of people and to make it fit for them and make it, again, they've seen the demand. Like they're stunned as well. They're like, wow, I can't believe so much is coming in. So that's a great example of like a product that is taken, and by putting on chain, we've altered the nature of the product. It feels and looks different. The interaction is different than before. And because of that, the velocity of the dollars, the sort of access points you can get at that people can participate in, it's really gone up as a result.
Yeah. Okay. So bridging back to what you were saying about the beginning, the customer profile being fundamentally different. Is leverage a part of this product, like borrowing to reinvest, like a levered loop in crypto parlance? Is that a part of the product? Is that like the driver, you think, of capital on chain, and therefore that capital on chain then seeks yield to power some of these strategies? Hence the kind of, I guess, ultimately the bridge back into the real world assets?
I do think that's a big part of it. And it's not because leverage is the only thing we can do, but as leverage just happens to be one of the like great use cases of crypto today. But that's exactly right. At Plume today, within this asset, we are the only product out there that is really looping against RWAs. Other people have maybe talked about it, but if you look at the volume, you look at what we're doing, it's actually zero utilization, because it's actually very hard to do. It's different than classic crypto looping. And so today with Mineral Vault, we have, I think with not only with the Peloton products, it's about a collective $40 million that's being levered against this thing. So now people are taking this asset, they're pricing it, people are loaning against it, taking out a loan, buying more of it, looping it. So this way, for the asset issuer, they're getting much more dollars into this thing, and they can really allocate it and get more leverage on their business. For the user, they're getting a bunch of extra yield and APY as a result. And also for the lending protocols, and also for the borrowers and the suppliers of the capital, they're also getting more use in the money. And so it's a fundamentally different product. And that's just one example. By bringing this on chain, we unlock new things. That's just not a thing in TradFi. You couldn't find a place to get this done. But now, again, couple clicks of the button. And so I think it's one of the things. And I think the more important thing, exciting thing is like, who knows what's going to happen after? Because now that you've transformed this entire structure, an oil well, the legal agreements, the bank accounts, all this stuff into one thing, a token. And you've packaged all. Now anyone can grab this token and build stuff on top of it and do new things with it. And so today, let's start with what we know, which is levered and looping and lending and borrow. But who knows what is going to come after that? And we've heard and we've seen a bunch of people doing interesting things. But we recently announced our accelerator, and in there's a bunch of applications we're going to talk about over the next weeks. But people doing new things with these tokens, I think that's where it starts to get really interesting and exciting. Like who knows what's going to happen as we unlock these things, and more comes out as a result.
Yeah. So it's easy to talk about general purpose blockchains being able to solve all problems and end all wars and address world hunger and everything else. But do you view maybe a potential path for Plume as being like an asset origination, asset management focused chain? And then users in different places can ultimately access it? Or do you think that their whole range of other, I don't know, payments going to be a huge use case, is like end customer embedded wallet experience is going to be a huge use case? How do you think about that?
Yes, it could be any of those is the honest answer, right? Now, I think for us and the folks right now is like any business in the world, over time it becomes everything. And you expand it to more and more, and you basically follow your user base and follow the demand where it goes. We always go back to the reason we started Plume, which was to grow crypto. So we start on that point. The chain and the ecosystem that we've built and having a purpose-built blockchain was a necessity from our view to bring these things on chain. But it's not the end point. Ultimately, what we care about is the end user experience. What can someone around the world do with a click of a button? And so because of that, I think we will adapt and begin to expand and change things out into what I think payments is obviously a use case we were doing that. There may be better place suited for that today, unclear. But like, that's one thing that we're definitely open to. We've been exploring a little bit on what that looks like. I think asset origination for right now, we see as the primary driver. Let's find assets, let's bring them together. And more importantly than just bringing assets on chain, because that's only one part of the story. To make an asset successful on chain, you need this ecosystem. People to buy, of people to provide liquidity, of people to put this into an ecosystem, make it composable and useful in new ways. So that's the whole thing we're putting together right now. So that's a starting point. But where does it go from there? I mean, I think, like you said, many of these use cases, whether it's payments, whether it is embedding these things, right? We have no problems today of taking our assets and putting them into new chains, as an example, putting them into new experiences and new piece of real estate. So for example, plugging this into like a Robinhood wallet, or plugging this into like a Revolut thing, or plugging this into a TradFi experience, into an RIA somewhere, right? And allowing people to invest. Like we have no problems with that, because again, our point in our expansion is to grow crypto. And so we're open to all of that. So relative to the sort of like way people have thought about chains historically, which is like, oh, we want everything to come to the chain. We're building our ecosystem. For us, we're building the crypto ecosystem in totality. We think Plume and our way of constructing this ecosystem today is the best way to onboard and bootstrap this entire market and this entire network. But after that, we're very open and we want to, and we're doing it actively right now, to explore push into other places, right? There's great communities on Solana as an example. There's no reason for me to say, well, Sol should do the thing, I should do mine, I'm going to try and take result. No, not at all. We're more than happy to bootstrap this thing and bring it to Solana so more people can experience. And we think that net positive effect will help everyone grow, and it'll help Plume grow as well. But that's our view. And so that's why I got no problem. I'll plug into a TradFi bank. I'll plug into a neobank. We'll do anything. We're not just a chain. For these protocols to be successful, we think a chain is required to get.
Yeah. So if you think about how you hope to 10x volumes or users or whatever the metric that you prefer to focus on is, where do you expect that to come from? Is that new to crypto degens? Is it through a partnership with Revolut or Nubank and distributing into their customers with the sort of like crypto under the hood experience? Is it bringing more unique assets which people just can't get anywhere else, so they're kind of motivated to come to Plume for that? How do you think about that?
Look, I think growth comes from things you can't get anywhere else. That's the first point. If you can do things that you can do somewhere else, like, you're just not going to do it. Like, the reason why people use the iPhone was not because I could still read the news. Now I can read the news too, but it's because there were things that you could do in the iPhone you couldn't do anywhere else. Meaning you had the Uber, you had Airbnb, you had these things that were sort of native to the phone that you couldn't do on the desktop. And then, of course, today I can read the news, I can do all these other things. But like, the real driver was like a net new experience. And so that's how I think about it, which is like, what is the net new experience and what audience is trying to experience that? And what's the sort of like propensity for them to try the thing? How big is the pain today? And that's why today we start with crypto. Because when we're talking about tokenizing and bringing things on chain, the problem is mostly for crypto people, right? Like, who's here? That's the starting point. It's crypto people. Our view is still crypto first. And we think about the traction RWAs have within the crypto ecosystem itself. It's still very, very small. If you look at stablecoins as a great example of an RWA that has worked, that's a $200 billion asset today. It's a lot of money in stablecoins. If you look at RWAs, you're talking about sub 10 billion and even less users, even less volume. So I think there's a long way to go in just crypto, and the highest propensity for growth in these things, and who's here, is crypto. So I think you got to start there, which is why for us, it's growing within crypto, across new chains, into new assets like BTC, right? We spend a lot of time there. You can't talk about crypto without talking about the asset that represents 60% of the entire asset class. We start with crypto. But then right after that is, again, finding new things that people can't get anywhere else. Like, historically, that's been BTC and memes. That's what brings people in. But I think you create new structured products, create new experiences, we create new forms of leverage and new access points. All of that stuff will allow us to bring new people in different places. And I think what's next after that is embedding this in the place where people are. So again, like a Nubank or a Revolut or wherever they might be, where there's just a high propensity. And I think we sort of follow the stablecoin in that way. I think that the stablecoin is one of the primary drivers of growth into crypto in totality. People are coming in because they want to hold the US dollar. And as that becomes a channel in, we can then latch onto that and provide them new things after that. And so I think that is still developing because the stablecoin is still propagating all over the world. But as that comes into play, we come right after that. So I think right now, grow within crypto. That's our primary focus. But right on the heels of that is then tap into wherever the stablecoin is penetrated today to go into that area. And I think that tends to be a different audience than the classic crypto user, which is like the classic crypto profiles like the DJ. You know, someone's like aping $20 into like a 5K market cap shooter and trying to like rip a 10,000x or something. That's like what people tend to think about within a crypto user. But there's many profiles in the crypto user, right? Again, like the BTC user is largely like a buy hold type of person. And that user has a lot of similarities to the types of things that we're doing. So I think that's one like very near and target. Number two is the sort of DeFi user, the leverage trader, the sort of like DeFi farmer that's leveraging loops and all that kind of stuff to really get your APY. That's also a natural fit for what we do. And then I guess third, going into stable. And you can kind of see how this like takes you from very crypto to a little bit more into the Web2 world, right? Where the stablecoin user probably doesn't care about any of those things. They're just looking to get more yield in their dollar, find like a new savings account basically to hold their money. And I think that's a great way to plug into. I think when we hit that, man, that's going to sing because that's like real growth. But today, because RWAs is still so early and small, growing within crypto and like the near-end audience is enough to really 10x this thing. But then after that, to continue 10x and growth, we're going to have to tap into more of the Web2 world.
Yeah, makes sense. Talk to us about Nest, and then maybe through Nest, just the broader concept of what it means to build an RWA-specific chain. I think you guys had a unique strategic vision early on. I hadn't seen anyone else do it in terms of like building an L1 or an L2. I think you actually took on the development of a lot of applications on your chain and even like kind of BD directly on top of your chain around specific use cases. I'd love to hear about that and then how that strategy is evolving over time.
Just like you said, I think we're one of the early ones that come with this. We're not the only people, but like we're one of the early ones that sort of think about this whole thing. And I think it's because we were tethered more to a problem versus the technology and solution. Meaning we started off building just a tokenization engine. trying to just like, hey, let's bring things on chain. We'll bring them everywhere and people can do their thing. Over time, as we kept pulling the thread, we realized we had to build all this other stuff to make this thing happen. And it led to us having to build this whole ecosystem. For those who were thinking about building a chain, I would say spare yourself. It's taken years off my life, it has been like a whole thing. And it's just like so much more than I would have expected. But it's blast. I wouldn't need away, but like it's a whole thing to like build this ecosystem. People think it's just like, oh, I'll have a chain and get a couple of dApps. No, it's not that at all. You're competing with every other chain out there, right? You have to build liquidity. You have to build a token. You have to get your developer community up. You got to get the ecosystem. You have to all this shit together. It's like a tremendous amount of work. And not only that, the reason why we did RWA specific stuff, and I'll talk about Nest in a second, is because so many areas of RWAs are just different than crypto. At the end of the day, it's slightly different. These are real world assets. So you have to really bring this thing on chain. That's like a whole thing on its own. The actual act of tokenization, what we were told in the beginning, was some people were taking 6, 12, 24, 36 months to get this thing on chain. It's just not very clear. And in that process, it takes 120, 200 grand to make this thing happen. If you can imagine, back in the day for startups, you have to build and raise $10 million just to buy servers to get your website on them. So that's why like venture capital is such a thing. You had to like build this. So you spend 10 million before you even delivered a product. And that's where tokenization is today. You got to spend 100 grand, 200 grand and 6 months to a year before you can even deliver the first product on chain. Ridiculous. So we thought we got to get rid of that. We need to go to where we are today in the Web2 land. AWS is here. I literally use a credit card. I can pay as I go, and it's like 5 cents at a time, and I can get my app up there and test and see if people want this thing. That's where we need to go. That's a starting point. So we got to start there. That's why we started. But we realized very quickly, once you get here, having people use it and find success is a whole different thing. Even something as simple, like again, looping is such a common concept in crypto today. But looping against RWAs is very, very difficult. It's just not the same thing. Pricing is not real time. There's no like real time oracle for this stuff. So you can't just price it regularly. Not all these things are liquid. And so this idea of looping into this thing where you can put money in, but it doesn't really come out at the same pace is a hard thing. And then even simple things like, access, just like literally having all the KYC infrastructure, the AML, like all that stuff is a part of it. So like those are only a few pieces, but there's so much that is tied to the real world. That's hard to do. That we found that as we're customizing more and more things and looking around at other tools and other dApps to try and like put it into our ecosystem, we found that we just had to build more and more of it ourselves. And so whereas we started off doing just one piece and hoping to plug into an ecosystem that worked, we just found it didn't exist. So that's why over time, as we start off tokenization engine, we've ended up building a chain. And not just building the chain, we're like building our own dApps on top. And we have to like take a lot of that into effect. And like one of those is Nest. And Nest is our yield distribution product, which again, what we're trying to do is take all the complexity of the real world and boil it into the Uniswap screen. What's the contract after? What's my deposit? How much? And just swap. That's it. 5 stables into this thing, swap. That's it. That's what we want to put into. That user experience to me is the magic of crypto. I think it was almost like the iPhone experience for crypto when we saw Uniswap back in the day. It's like I could swap in anything at any time. You've got an AMM here. It's auto balance. Like it's magic. It's amazing. That's what we're trying to get it into. And so to do that though, not only do you need all the infrastructure to get set up with Plume and all the L1 stuff to get there, with Nest itself, you have to register different entities. You've got KYC stuff. I've got taxes to file for this whole thing, right? We have to manage identity and then licensing and all kinds of stuff. So it's a tremendous amount of work to get there. And so the infrastructure is great, but if no one can do anything on top, what's the fucking point? So we had to build all this stuff to get it there. And that's what I think people are realizing now and why more and more focus is going. That's why this journey is going to be 20 years. There's still so much to do here. But by putting this all together, we've begun to give people a taste and a flavor on both sides what it can be. The crypto people realize, oh, this is an RWA. Got it. It's the same shit. I know how to use this. Let's build on this. And on the other side, they're realizing, oh, I'm actually seeing real money come in now. Versus like you launch this whole thing and no one buys it. Now it's real money coming. It was real users. Okay, now I can begin to think about it. So that bridge, right, is what we're trying to build here. And that's why it necessitated us build this whole thing. So that's why this whole thing had to get built in this way, because these tools just weren't available.
How much of your build, I guess, has been pure tech versus like legal, financial, regulatory structuring around some of these assets? It sounds like what you're really looking to do is make, in many cases, financial assets easily accessible, and it sounds like operate in a permissionless way. How much work have you guys done on the legal, financial, regulatory side to make that happen?
Honestly, it's a lot of that. I would say the technology stuff is not trivial either, because even if you look at things like lending markets today, having a lending market and a looping system work with RWAs is a ton of customization to make it work. Because again, just going back, pricing is not real time. So you need the oracle to work in a certain way, right? You need to be able to handle leverage in a certain way. You need to be able to withdraw and like wind this thing and like unwind a position in a certain way. So there's a lot to do there. That's technology focused. But before any of that is the legal stuff. You have to do all the stuff to make it happen. That's why today we spend so much time with folks in DC, in Hong Kong, in the UAE to sort of help figure out, and also for us to learn real time what those things are that they're doing so we can make sure we incorporate into our business. But so much of it is that. How do you set this? It's expensive. Setting up a feeder fund to actually host this asset is 45, 50, 100 grand sometimes. To do it in the Cayman, it's 100, 200 grand. We have to do that to really abstract this whole thing away. A lot of it is that. Then you're talking about filing papers and literally, we file taxes. We have to file paperwork for all this stuff. It's like a whole thing operationally. And so I think that's one of the things people don't see. The legal setup, the structure, then the operations to manage that after is a huge part of this as well. So it's not just technology, even though it's a huge part of it. And so that's why relative to other things that you can just let's set up a protocol and we can go. That's not what it is for us. We have a tremendous amount of infrastructure stuff to make this thing happen.
No, but it's such a powerful, I guess you could kind of oversimplify it and just call it go to market, or such a powerful strategy. Because the alternative, if someone's building on a purely neutral chain, like Ethereum mainnet, then it's bring your own legals, bring your own structuring, bring your own lawyers, bring your own SPV, bring your own whatever it is. Which, to your point about costing 200 grand and taking 6 to 12 months to get online, now you're in that world, which makes it very difficult to bootstrap the issuance of a new asset or build a new financial business on a chain like that. But if you guys can centralize a lot of that and take it over, I imagine it helps people get to market and start to prove value much faster.
100%. That's the entire point. When we set up Plume, as a simple example, Stripe was the thing. Now, Stripe Atlas in particular. So I've set up many companies before, and it used to be when you go to LegalZoom or whatever to set up a company, you have to fill out this huge onerous form. You've got physically mail stuff. Everyone knows 83B is you have to by a certain date, you have to fill out this form. It's not clear where you send it to. Depending on, I remember just even sending it to a certain address was the whole thing, and making sure they received it is a huge thing. It's there's so much physical stuff around paper and faxing and mailing, right? That's just not clear. And then what Stripe Atlas did when we set Plume up was they put all of that into a black box. All I did on Stripe Atlas, I just put in my email address, I clicked a few buttons, and it was live. And then what they did from there is if I want to do 83B, I push a button. What happens behind the scenes is they are physically doing that work. They are printing this stuff out for you. They know where to send it to based on where you've incorporated and where you want to send this stuff. They'll mail it out for you. They'll watch every day to get this thing out, then update the website so you know when it's there. If you want to get your EIN, employer ID identification number, to open a bank account for the company, usually you got to file your forms, send it in, wait for them to approve it, and then get it back. And sometimes it takes an additional several weeks to get the EIN back. So you're sitting there waiting for your company and you can't set up a bank account. And so now with Stripe, again, same thing. They ping this thing every single day and call them for you. So the minute the EIN's there, even if it hasn't been sent in the mail, you can get it on the website. So they've abstracted this whole thing away. So to me now, this entire processing company is clicking a few buttons and I get everything real time and updated. Behind the scenes, a tremendous amount of complexity and paperwork. We want to do the exact same thing for RWAs and these assets. Take all that shit, the legal stuff, the filing, who to call, where to call, and just take it away. So now I click a few buttons and I take this thing on chain. There's still more to do there. We're not in a perfect state yet, but that's where we should be getting to. We can see the internet again. Once you can swipe a credit card and take your web app online and test this thing out, the amount of innovation on the web just exploded. And so to me, that's where we need to go. And it's created a world where 20 years ago, if you told people that we would be doing everything on the internet, that's not a thing. Right? The internet started off just as a place for people in universities to send reports and documents to each other. That's it. They had never thought that today we'd be doing business on the internet. We'd be doing things around the world. People be living entirely on their phones, right? And it's disrupted news and media and everything. And so that to me is where we are right now. We need to simplify all these inputs and then everything will expand from there.
So Stripe offers that service. They charge a few $100 for it. Great deal for a startup founder or someone opening a new company. And then, they probably will look to monetize you on payment processing at some point as you grow your business, right? Because these are probably internet native businesses, which are being set up online. And then anytime they want to transact, now there's a need for Stripe's core product. So I imagine there are some economics which go above and beyond just the ticket price of Atlas for Stripe. What's the Plume parallel? If I want to build an application on top of Plume, which relates to building levered looping vaults for an asset, and maybe I bring the asset or maybe I partner with someone that has the asset, how do you work with me to really accelerate that? And then what do the economics look like over time?
I mean, it's the same thing. It depends on where you come into the cycle, whether it's tokenizing, we can help someone bring this on chain, similar to the Stripe Atlas type thing, right? We'll help you tokenize, get this thing here and make that very simple and smooth. Number two is that once it's here, how do you then plug into the ecosystem to make it useful and valuable and find users and find dollars and put that to work, right? We have an ecosystem. We have a very strong marketing team and a strong marketing engine, right? And so all of this is how do you plug into an ecosystem that makes that thing better and more valuable and interesting? So that's the second piece of it. Both of those things, and then how do we capture value basically? And how does it work for us? There are many ways to do it. For us right now, with the benefit of being a blockchain is, we have every transaction is fee for us, right? We take a small gas fee and that helps us power the legal system. So that's part of it. So there's similar to Stripe where payment processing against how to make money, right? Which is just the sort of lifeblood of how this thing works for us. It's just if you're doing anything on our network, we make a little bit of money. The second thing is taking products like Nest as a simple example, because so many assets are flowing through Nest, and many of them because our focus is yield-bearing assets, we can also take a little bit of vig on top. And so if there's yield coming in, we can take a small bit of that and begin to hold that for ourselves, pass it off to the users or whatever it might be. But there's ways to monetize there. The third way that I think is also really interesting is the bridging between the off-chain and the on-chain world. Simple things, there are ways in which the on-chain asset oftentimes, like in crypto native assets, arbing between exchanges, how you keep prices in line. With crypto in the real world, you could do the same thing, right? Let's say you bring this asset on chain. You can arb between the real world and crypto. There's a lot of money to be made there. Even providing like faster liquidity for these things and building new products and new markets. Let's say it's a very safe, stable asset, but this is a 7-day holding period for these things, as many of them are. As a user, if I want to get it early, I need the money now. I can go to a secondary market. Let's say there's not enough liquidity there. But you can build a new market or build a new service in which, look, we'll provide the service now. Now, the difference is I'll take a small cut on it now. So now in 7 days, for me taking on that duration risk, I'll make a little bit extra money on the side. We can build new markets rather. So there's all of these little activities to do. I think all these things are opportunities to make money, and all these problems make the experience only better and create new markets and new activity around it and create moats for us because that's a new pocket, a new market that has to be bootstrapped here. And once it's there, it's like MEV in the beginning, right? Like MEV was a great place to make money. And these are new ways to do this. And arbing between the real world and crypto, I think is one just obvious, very tremendous. But there's so many more that tap into that.
Yeah. A lot of that stuff, ultimately what it results in is a more frictionless experience for users, is better UX. Yeah, sure, there's a cost to it, but it ultimately creates the sort of real-time internet speed economy that we're all looking for.
For sure. That's exactly right. I think that's the exciting thing about this.
And collapses out a ton of other costs in other areas. Who knows? Time will tell, but surely it ends up being a net uplift from both a financial and an efficiency
Exactly.
standpoint.
When you can go into crypto today, push one button, and have that money get spread all over the world instantly into the greatest opportunities on the planet. And then one button, click that and have it all get pulled back in instantly. There is tremendous amounts of money to be made in that entire flow. Today, that process in the real world is just not possible or would be super, super, super expensive. So like you said, collapsing all of that to a click of a button, we will take out 90% of the cost and pass that back to users and pass that back to the ecosystem. We can keep 5 to 10 results and still make tremendous amount of money.
Incredible. Chris, thank you so much for your time. Great conversation.
Thanks so much for having us. Really appreciate it. And of course, we're on Telegram and Twitter and all these things. Ping us anytime, any place. Look, I think going back to it, we think of this as a very, very positive sum type thing. We are here to talk to anyone and everyone any single day of the week to sort of learn on what else to bring on chain, to figure out what else to build and explore new things. I think the most exciting things about RWAs, right, that people often get mixed up with, I think it's just a translation of the real world into crypto. That's not it at all. We're building a new world and a new market, which crypto and real world assets are just one thing. They're all the same. There's no distinction for these anymore. And because of that, all the exciting stuff has not been even built or conceptualized yet. If anyone's got anything interesting to talk, we're always open to explore, to help seed things, to help build and help do things alongside it. So I think all of this is just a very, very positive one for everybody here. So anyway, thanks for having us on today. Really appreciate what you guys are doing.
Chris, Yin, thank you very much for joining us today.
Thanks so much.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.